So, couple contradictory Fed comments coming out from few members. We heard that Fed Bowman came out over the weekend talking about that she sees more rate hikes coming in. Higher rate hikes, not just one, but few rate hikes this year because hey, inflation still needs to get to the 2% target. We also heard from Fed Williams come out and basically say that I wouldn't rule out rate cuts, especially the start of next year in 2024. Completely contradictory comments from both Fed members. Now, although Bowman is known to be hawkish, the markets didn't really exactly react to it. Bowman's been hawkish throughout. And Bowman's argument is that, hey, we want to be really careful with this inflation because there's just still certain areas that are still high up when you look at the inflation metrics. And we can, as we heard from the Fed, especially Jerome Powell, that they don't want to preemptively start cutting rates, especially if things are fine, because if, for whatever reason, inflation picks back up, and for some reason the Fed members say that, hey, they could see a ramp up or a pick back up in inflation, especially when you look in history, inflation just doesn't come down completely and collapse completely. It has its cycles, ups and downs. So if that happens, they're ready to do something about it. And like I've been saying on this channel also, you want to take a good look at crude oil and the commodities, right? We see crude oil start to pick up as well. It's now around the $83, $84 per barrel, and it's hitting that resistance level. It's got a triple top there around the 83, 84. If it breaks that and it gets momentum, and there's some sort of fundamental catalyst or technical that takes us to the $90 or $100 a barrel, you can definitely expect that the Federal Reserve will react accordingly, because that will affect the inflation. The inflation will look higher, the headline number will come in higher, and that will cause the Fed to come in with another rate hike. Could they go back to 50 basis point rate hike, 75 basis point? I don't think 75. 50 basis points is a possibility if it ramps up really, really aggressively and the data is still fine. Jobs is still fine, growth is still relatively fine, although you may argue otherwise. I totally get it when you're looking at other areas and you're looking at the live data and you're looking at what's happening around you. But just from a Fed's point of view, when they're looking at this data and you look at the jobs data like we had recently come in stronger than expected, then guess what? They will continue to keep conditions tight, especially if the government on the federal side continues to give some sort of stimulus, continues to prop and pump the economy with some money, then you can expect that from the monetary side of things, the central bank to continue to remain hawkish and tight. Now, what about Williams' comments, right? Williams came out and Williams said that, hey, I wouldn't rule out any rate cuts for next year and even possibly early of 2024. So, whoa, I mean, is this the first Fed member coming out, maybe signaling that we could see the pivot? We could see rate cuts now come in? And why, right? Why all of a sudden? I thought, when you hear Bowman or you hear Fed Powell, they continue to be hawkish, continue to hold their stand and say inflation, 2%. While Williams say that, I wouldn't rule out rate cuts. Although, yes, William didn't say that, hey, we're going to get rate cuts for sure. But those comments are quite aligned with what the markets are pricing in. The markets are pricing in basically less than 40% chance of one more rate hike this year. So not agreeing with what Bowman is saying. And pricing in that early of next year, 2024, we could see rate cuts. We could see it by March of next year. But what would bring in those rate cuts, right? Why all of a sudden? Especially if we're not at the 2% target. And especially if things are still fine, right? If things are still fine, why would the Fed come in and cut rates? Wouldn't that bring back inflation up higher and cause a problem? Well, the only thing that comes to my mind when I see what the markets are pricing in and what Williams is saying is that you got the recession coming in. But wait, hold on. I thought the Fed told us that there's no recession. I thought they just came out. Yes, initially they said, hey, there's a risk of a recession this year. And then Fed Powell came out and said, hey, we don't see a recession this year anymore. So why the rate cuts, right? Wouldn't rate cuts come in when you get that recession? I think just as the Fed is confused and like everybody else is, I think nobody really knows what's going to come or when it's going to come or what's going to happen. And I think eventually how the story plays out when you look past in history with aggressive tightening, aggressive rate hikes, it always ends and leads into some sort of recession or hard landing. I'm definitely not on the bandwagon or on the case of soft landing like you're hearing throughout the whole news media. You're hearing all over the place. You're hearing people talk about soft landing, soft landing, soft landing. I completely disagree with that. I think we are going to see a hard landing. And that's why the markets might be pricing rate cuts next year. And that's why Williams, might be shifting its tone, because as Williams discussed, why rate cuts could come in is because Williams said that they're a little concerned about the unemployment rate. So if the unemployment rate ticks up, and that's what Williams sees, the unemployment rate ticking up, and when it does, and as we see in the projections from the Fed as well, that when the unemployment rate ticks up, as we've seen in history, we tend to see a recession follow through after. So maybe no recession this year. Maybe it's actually next year, 2024. And when it comes in, then you're going to need to start to soften things and cut rates, because then, yes, inflation and that target 2%, you might see it hit the 2% or maybe even below, especially if you get a hard landing or this massive recession that brings prices down, causes the unemployment rate to skyrocket, the jobs number gets worse off, the growth numbers get worse off, then yes, that makes sense. So Williams is sounding more in line with the markets, although the markets can be definitely wrong, although we can get new information, new fresh data that tells us that, hey, rates are going to be higher for longer. And we also have yet to feel the massive blows of all these rate hikes, because they tend to have a lag of 6 months to a year. So in fact, if we're counting 6 months, whatever happened up until January of this year, we're starting to feel now, right? If we want to, let's say, be conservative and say a year, by January of next year, we will start to feel what it's like January of this year. Right? We'll see. Time will tell, right? Time will really tell how this plays out. I'm, of course, on more of the hard landing area than the soft landing. And I think that, the narrative of the soft landing is going to really confuse people and throw people off guard, which will not end off in a good situation, which is why you are hearing about this rate cuts or potential rate cuts, not ruling out from Williams, the fear about the unemployment rate, even though the jobs data may look good for now, and the market's pricing in some sort of rate cuts by the start of next year. And let's also not forget, I'll throw another one in there, the yield curve, which has been steepening and steepening quietly. We're seeing a bear steepening in the yield curve, where the bonds are selling off, yet the yield curve is steepening. And that is also a telling sign that, hey, something could be around the corner, something could happen, some sort of credit event, and so on. So let me know what you guys think. Leave a comment below, subscribe, hit the like button, bell icon to be notified on the next video, and I'll see you guys around. Cheers, bye.